Okay, hi there. So next one is how to read an options payoff diagram. That's what we're discussing right now in this one. Let's go through the platform one more time and bring up a long call and a long put. It's the easiest one to understand first, and that's why I keep going to long calls and long puts. Actually, let's start with the long put side because the put doesn't get the attention that it deserves sometimes. Again, I hit the ask slide, so always remember that. You need to hit the ask to buy the option. Right click this, analyze. Um, okay, so we already have this here. How to read this thing? Um, first thing, the very first thing I do is go into set slices and I go to break even. Always make sure this date, 1019, is same as the one above it. Because that's how the charts are run. So if the date is correct, it will give you one standard deviation move between now and then. And that becomes your shaded area here. You can change probability of in the money. That's what the shaded area is. If you select out of the money, it would be the opposite. Um, the next thing is you can select the standard deviation that it shows. So go here. Currently, it's at one standard deviation, 68%, 0.27. You can select 2 and select 3, right? No need to select that, anything more than 1 because it doesn't happen more than you know, the probability of it staying within one standard deviation of its mean between now and expiration is 68%, and that's where our sweet spot is. What else to show you? We don't need that right now. Okay, how to read this diagram? So the T line is your max loss. So look at these numbers here on the left. Always make sure you look at these numbers on the left. So when you hover over the chart, my max loss is 264 because that's what the cost of the price the debit is. Because I'll be paying this debit, so I'll be losing it or losing all of it if it's worthless. Right? Right now it's 263, so this T number has changed. The purple line is actually your profit and loss. So this purple line is your P&L, theoretical P&L, not real, theoretical, which you can take a look at and then see how it changes when everything changes. Um, so you need to make sure that the probabilities are right. You are looking at the right T line here for max loss. Always understand your break-even points. So the stock is trading at 224 something. Let's move this. 224.88. That's what this marker is here, the red marker, 224.88. And then you have to cover the debit that you're paying to get to your break-even first. That's your first hurdle. And in the process, you will be losing, don't forget, you'll be losing $8.70 on a daily basis. If the stock doesn't go anywhere, stays here, you will still lose $8.70. Um, so, um, so between now and here, first your stock needs to go over this hurdle and get you to your break-even price, your break-even marker, which is here. Only after that, it will go up for you if it keeps going down. This is a long put, so the stock price has to go down for you to make money. And then it has to go down first by $2.60 so you can cover your debit, and then anything after that. That's how you look at the P&L diagrams. If you have any more questions, let me know. Always look at the P&L day number, P&L open. This is what your P&L open will be if you buy it at this price. So if you buy lower, your P&L open will change to a positive number. If you buy even lower, at 258, it will keep on changing. So your P&L day will change with the same thing. This line here is a plus 10%, meaning if the stock price moves plus 10%. So you can see the stock prices here. Currently at 224. If it moves up 10%, it will be at 247. If it goes down 10%, 202. What will be your theoretical Greeks if this happens? This is what these numbers are showing, these lines. What will be your theoretical Greeks if it goes up by 10%? This is what this line is showing. But 10% is a big move in Apple, right? So I don't know how many times it has happened in the past, but in a day. There are a couple other things that we can look at. One thing is if you bring up this setting signs here, you can change the volatility adjustment. Look, if the vol goes up, you make money because you're long vol. Look at the, what was I going to show you? Look at the P&L. Look at the P&L open number here. It goes up, look at your P&L because you're long vol. Um, However, now you can look at the number of days and you can change the number of days and then see, again, you can keep changing these metrics, keep changing these parameters. Bring up exercise price, move that, bring up vol, move that. Uh, you can also change days to the expirations here, like the number of days that are left in the contract. You can change the stock price if it goes down. Look, if it goes down, you make money. So always, these are all theoretical numbers. So just make sure you don't live with these. Don't read these as with a grain of salt here, because this is not how your actual P&L is going to move. It will be completely different. But this is just theoretical stuff. So it's good to understand the platform like this. Like how do you look at these numbers? This is what you're looking at. Make sure you understand all this. Keep changing it, and figure out where your P&L will be a few days from here. I think you can change the days by going into a calendar style something. Oh, here. So if you go, let's say 10 days out. So you're saying 10 days out, and on 9/26. So not 10 days out. It's here. Let's say October 4th. Look, the shaded part is already reduced. Your P&L will be negative because you haven't changed anything else. So what you're trying to say here is by 10/4, if the volatility jumps up, see so many different things need to fall in place for you to make money in this contract. If the days have passed, so you're already losing theta. So this thing cannot change. You have to live with it. 10/4. The volatility jumps, meaning the stock is down. So stock is down by, let's say, from here it goes down to 220. Then what your P&L will be, you will be at $136. That's how you look at your theoretical P&L. Look at this. I've changed so many things. So first of all, this thing will not. You cannot do anything about this because this has to happen. From between now and then, you have to move up the timing ladder. If this happens, and if the vol goes up and the market goes down by this much, then your P&L will be this. Otherwise, I don't know what it will be, theoretically. The action moves will be slightly different. So anyway, this is how you look at it. Thank you. Bye-bye.